Hi there, welcome to this week's market analysis. So as usual, what we're going to do is I'm going to walk you through some of the events that's happened very quickly last week. What are some of the events you want to take note of as of this week? And from there, we'll go on to the charts and share with you some of the opportunities and analysis that we have for this coming week. Now, first off over here, let's take a quick look at what are some of the events that have happened for the past week. Okay, so first up, we have the RBA cash rate. So the Central Bank of Australia has raised rate by 0.5. Again, nothing surprising. Most of the global central banks right now, they're in a hiking process, right? So over here, you can see as well for Bank of England, BOE, we do have a rate high of 0.5 as well. Again, as I mentioned, nothing surprising. Overall, most of the banks are actually hiking. Now, something that is very interesting we had was the NFP and the average hourly earnings. So these data as of last Friday suggest that the overall economy in the US seems to be growing. Okay, however, of course, you want to also look into the part where because of inflation, because of the rising cost of living, some people are perhaps working more than one jobs in the US, right? And that would probably contribute to the part where more people are working, they are forced to do that as well. Unemployment rate has been falling. Okay, NFP has increased drastically. Average hourly earning has also increased more than what people have expected, or higher than the consensus, right? So overall, we did see the dollar pop a little bit from this data over here as of last Friday. Okay, so with that, let's take a look at what we have this coming week. Relatively to last week is a rather quieter week. You can see over here the event calendar is way shorter. Okay, so Monday and Tuesday, not much of a stuff that's happening. Monday, we do have a little bit coming from the New Zealand side with inflation expectations. I think that is definitely going to have some kind of volatility in the Kiwi. So do take note of that. Tuesday, there's not much of things. Wednesday, we do have the CPI and core CPI coming on for the dollar. Okay, those two events are probably going to be important as well because it's directly related back to inflationary pressures. And then after that, Thursday, nothing much. Friday, we do have the pound GDP and the prelim GDP. I think that's important as well to track, is the UK going into a recession too, right? Because from a technical point of view, as well as technical definition of a recession, the US is actually already in because of consecutive negative GDP, right? So I think for the UK side on Friday, I think that will be crucial as well. It's gonna give, it's gonna affect the sentiment on the market as well. Okay. However, overall this week I think is relatively quiet. Okay. So those are from the event calendar. So with that, let's take a look at the technical charts over here. Okay. So as usual, we're going to kickstart with the dollar index. Okay, so if you take a look at the dollar index from a forward time frame perspective right now, what we have over here is, as I mentioned last Friday, we do have a little bit of a pop. Okay, however, overall structure here remains, for me, is still bearish as long as the previous high around 109.30 holds. We might see a little bit of resistance as the dollar continues to rally a little bit towards 107.20 to 107.70, which is our 50 and 618 Fibonacci, right? So if you kind of see a little bit of a crawl stall around that zone, we can expect the dollar to perhaps weaken another wave down back towards 104.55 or 104.60. Okay. So for me this week as of now, what I'm seeing is I'll be more interested to look for sell opportunity in the dollar. Okay, of course, we need to see how market develops for the week as well, right? So inverse relationship, we have the euro dollar over here. Okay, as of now, I think this pattern is still pretty much very clear. We have an impulse push coming from the low of 0.9950, and the euro dollar has been consolidating since the 20th of July. Okay, so no doubt this is definitely a corrective structure because it has been going sideways for very, very long. Okay, So overall, I'm still expecting one more push to the upside. Potential entry area that I'm looking out for is somewhere around 1.0070 to 1.000, right, which is our parity level. And of course, a protective stop can be placed just below the previous low with a potential target at 1.04. Okay, so that's on the euro dollar. I'm looking for upside. Pound dollar over here, depending on how the market opens next week. Okay, I think we still need to keep track as to how the market's going to develop, right? But for now, over the weekend, if we see a little bit of a rejection at the 50 and 618 Fibonacci, then we can expect one more push to the upside for the pound dollar. That would potentially bring it back towards perhaps this high, somewhere around 1.24. Okay, but of course, as I mentioned, we need to see how the market opens on Monday. What's the reaction that we get there as well? Okay, Aussie dollar over here, short term, I do expect a little bit more downside. We do have a very nice confluence around this zone at 0.6830. We have a 1-to-1 Fibonacci expansion as well as a 618 retracement over here. Well, I do expect a little bit of reaction in the market to pop back up to retest back at the previous high at 0.7050. So for Aussie dollar, if you're looking at very short term trading, I think you might get a short trade early on for the week. However, if the market comes back around 6.830, I'll be more interested to look for the reversal and trade it back to the upside. Okay, in terms of dollar Canadian, we do get a very nice pop. Okay, I'm not sure how many of you managed to catch that on the Friday. Okay, I did share this as part of our daily trading dose idea as well. So if you managed to catch that, congrats, right? However, going into this week, I think you want to keep an eye on somewhere around 1.2990 to 1.3050, because this zone here potentially is going to complete what we are looking out for the bigger picture perspective of a head and shoulder pattern, and we'll then flip our position and start looking for sell instead. Okay, so dollar CAD over here, do keep an eye on how price is going to react around that 50 and 618. Okay, dollar Swiss franc, I'm maintaining a slightly bullish perspective as long as price maintains above that recent low at 0.9495. We kind of had a very nice double bottom. If I stretch it out, you can potentially see this as even a triple bottom. It's not a buy yet, but if the market continue to consolidate a little bit, or if according to any of the strategy that you're using gives you a decent and valid buy setup, I think you can take the trade to the upside, right? So I'm bullish on the dollar franc. Now, on the last major pair over here, we have the dollar yen. For me, on dollar yen, I'm maintaining a very neutral perspective for now. Yes, the market has been pushing up since the low established around 130.40. However, I always say this, if you only get an impulse push, I would rather maintain a very neutral perspective, because we do expect the market to consolidate after a strong momentum push. Okay, so I'm not too keen to be focusing too much of my resources onto dollar yen. Okay, I'm probably not going to focus too much for the week. We'll just let it set aside and see how it develops throughout. Okay, so I'm maintaining a very neutral perspective on the dollar yen. Now for gold, after a very nice run, okay, I've actually took some partial profits off my position on the buy, and right now I'm expecting a bit of a pullback, and that would be good because it will open up another opportunity for us to look for the buy. And of course, for those of you who miss out the very first run, this can be a second opportunity to get involved in a long-term buy on gold. Okay, so do expect a little bit of pullback. Of course, we do have this trend line over here, as you can see. If it breaks it, then there's a very high chance we're going to go back towards a 50 and 618 Fibonacci retracement. That will bring us towards 1738 and 1724. That would open up an opportunity to look for buy setup, and we are long-term bullish on the gold. Okay, so precious metal wise, for the remaining part of this year, I'm holding on to a very bullish perspective. Okay, last one over here to cover in this video, we have the S&P 500. Okay, we do have a very pretty nice run, but right now we are seeing a little bit of the I would say maybe double top, you know, I call it a crawl. We do have a little bit of a divergence building up over here as well. Short term wise, we might get another push up, right? However, if this is going to just develop in a very slow manner, I would suggest you want to be very careful, because there's a good chance we might see a bigger pullback. Okay, as I mentioned over here, towards 4012 or 4040 before maybe a bigger, longer move to the upside. Okay, so overall, in terms of the equities market, just be a little bit careful. Okay, I think because of this pattern that's developing, the market might be a little bit choppy for the week. It might not give you a very clear setup as well. So just be a little bit patient, see how the market develop. Maybe at the start of the week, give it a couple of days. You know, maybe by Wednesday you get a very clear setup. Then, you know, with your proper strategy and things like that, you can then consider trading the S&P indices or some of the equities. Okay, so that's all for me. All the best to your trading for this week, and I'll see you guys in the next one. This video is partly sponsored by Zenfinix, bringing you the weekly market analysis. And of course, if today you would like to take your trading to the next level, or if today you're very new to its Forex trading, then we do have a collaboration together with Zenfinix where you can actually get the 4 Trading Pillars Masterclass for free, fully sponsored by Zenfinix. All you have to do is click on the link in the description and find out more how you can actually get access to this masterclass for free.